What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a CMRX Statisticals and Technicals thread of analysis. Before we start, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab, on Discord. Okay, you guys, so let's go ahead and dive right in. If you don't speak English, you guys, please consider selecting this gear icon right over here. Make sure that the English auto-generated is selected, because if it's not, you'll notice that you won't see the auto-translate right down here, you guys. So you have to click on it, go back into the menu, select auto-translate, and then you'll see an assortment of different languages for you to choose from. Okay, so let's go ahead and flip the script right over here, dive right into the charts. Oh, you guys, one more thing. There are impersonators, okay? Messaging members of the Discord, please remember to turn off your direct messages. And if you need to reach out to me, you can actually friend request me or message me on the Discord community on a general discussion or something, saying that, hey, can you send me a DM? I want to talk to you. Just that way I can reach out to you personally, and we'd be able to talk in private if that's what you guys would like to do. Please know that I would never ask you for your wallet information. I would never ask you for your bank information or have you buy or sell any assets, you guys, as I am not a financial advisor. Please take whatever I do show within these videos as a form of entertainment, and do your own DD, and we'll be okay, right, you guys? Okay, so we have been noticing that CMRX has been in this bullish reversal pattern, you guys, and this pattern is called a descending channel. These usually present a bullish scenario for the larger time frame outcome for CMRX. It's looking pretty good, you guys. As you can see, we have broken out of this channel, and this is pretty good because it is following the golden rule of three. And you'll know that if you watch my videos often, I talk about the golden rule of three often. We have test number 1 of resistance, 2 and 3, followed by a capitulation event or an accumulation of sorts, and then we have a breakout, you guys. So it is also following market geometry. If you can take a look right here, it looks like we had some type of falling wedge, in which case we did end up breaking out. We came back and tested that newly converted resistance into support, followed by a continuation onto the upside, you guys. And now the reason we are facing this sell-off right now, you guys, is because we are in the process of testing this newly converted resistance into support. First, this candle didn't actually touch right at it, you guys, but this one is testing that. And if honestly, this is looking like we need to continue to and test this possibly one more time, potentially. Yeah, this candle closure, you guys, is an indecision candle, and it's pretty much a tie between the bears and the bulls, and this is very much what's happening within the entire space right now, you guys. It's everything is kind of dependent on the economical data that's going to be coming out this week, like CPI and the other economic metrics, you guys. So, but in this setup, you guys, it's looking like we may want to be able to test this one more time. So we definitely need a candle closure above $1.76 in order for us to be able to continue to the upside. In this particular setup, a daily closure above $1.76 before that upside continuation gets met, you guys. Let's go ahead and move on to the next chart. So this is the more of a shorter term. This is the 4-hour chart that we're looking at right here, you guys. So the reason why I circled this area right here, it was because it was very similar to the support lines where we broke out of the support line and came back to test it, except that this one, we broke out of the support line and failed it. And I did notice that the price action was actually favoring the bulls versus this iteration right here, you guys. So in the 4-hour chart, we are also within a reversal pattern, you guys, and this is another descending channel. A couple things to notice right here, that when we start printing large wicks like this, you guys, things are not looking too good. We are trading above the 50-day simple moving average, which is good. It is support, but know that we are well within the golden ratio, which is in between the 0.382 fib ratio and the 0.618 golden ratio, the inverse golden ratio. So this area is likely to be tested first, you guys. So if you can see right down here that there is a support at the $1.75 level that we can actually still come back and test, you guys, which is confluent with this line as well. And that is in accordance into what we're saying about potentially closing a candle above the $1.75 area, preferably on a daily candle, you guys. So this is following market geometry, and there are some pretty obvious moves happening right here, you guys. But please remember that everything is pretty much dependent on the CPI data that's going to be coming out this week, you guys. So also another thing to note is that we have a low right here, and we have a higher low printed right over here, you guys. We have a higher high and a higher high right here as well. So as you can see, we are in a series of higher highs, higher low structure. So sometimes the higher high, higher low structure is a bearish setup when you're presented within an ascending channel. But in this case, you guys, I am not seeing us passing the 175 level. I mean, there is the potential of it where we can test 171 and recuperate. And recover. But right now, these large wicks are not looking so good. We definitely need some more confirmation before a continuation, you guys. So let's go ahead and jump into the statistical side of this analysis, you guys. So we were actually following this falling wedge for a while, and we since broke out. And another way that we can see how much market geometry we are facing is we can take a trend line from the hypotenuse of the triangle to the lowest point of the triangle and apply it to the breakout for a price objective. So when we apply it to that price objective, we are right about here, and as you can see right up here in these metrics, this is what's going to tell you the high of the candle. So the high of the candle is $1.95, and the metric is showing us I'm sorry, what happened right here? Let's get that candle. So yeah, $1.95, and oh man, look at that, you guys. Our trend line is actually right at it. As you can see, I'll move it back and forth so you can see. So, I mean, this was a very kind of typical move, you guys. So another thing to note is that we took the data in order for us to gain the upside move based on historical volatility or statistical volatility. And the way we did that is like this. New listeners, please listen up. This is volatility we're looking at, represented by this indicator BBWP. Volatility is direction neutral. In order for us to gain a bias in direction, we pair it with stochastic momentum indicator, like this one right here, with a stochastic momentum indicator or a momentum indicator of sorts, right? So in my experience, this indicator has given me a ratio of about 75 to 95% accuracy in guessing the direction alongside volatility, since volatility is direction neutral, you guys. So we were actually taking the iterations based on this metric right here, you guys. So we were looking at it from this point and since saw a move to the upside. And now the reason we caught the move to the upside is based on this right here, you guys. Every single time where we reached below what I consider to be critical levels of contraction, it's below the 10 percentile. And every single time we reached below the 10 percentile, I actually took note of the duration of that iteration and the upside thrust based on that iteration throughout the entire history of trading for CMRX. As you can see, it is vast, you guys. So when we have more data like this, you guys, so know that this is all done by hand. I actually measured all this for you guys by hand so that we can be able to catch a good entry, you guys. So based on all of these metrics, and also you see red versus green candles because I also took and factored in the amount of times where volatility versus momentum profile guessed the upside move correctly versus the downside. So based on all of those iterations, you guys, we have a total of 83 iterations. Out of those 83 iterations, the volatility versus momentum profile guessed it right to the upside 67 times, you guys. This is an averaged upside accuracy of 80.72% with an averaged upside thrust of 17.90%. And the average duration is actually a backtest that failed. But let's go ahead and look at what happened based on the backtest data, you guys. So let's go ahead and zoom in one more time and take a look at this. 17.90% upside thrust based on the firing of the signal put us at $2.12, and this was the upside move candle that we got, you guys, and that has a high of right over here. You can see it. Take a look right up there, $2.11. So this was spot on, you guys. So now it doesn't happen like this every single time, but it is very close. The reason why I say this is because these are statistical metrics. They are not certainties. We take them because this is how some professionals trade, you guys. I'm mostly systematic, partially discretionary, which is in my bio. Systematic is this, you guys, based on a system of rules in order for me to be able to gain entry in a trade. And that the strategy that I'm showing you here proved to be just about 99.99% accurate, you guys. So and it also did take us, what I also mentioned this in the previous threads, it also did take us right to the 1.618 golden ratio before facing a sell-off. So now, why we are in this is not because of what happened here. It's because of what's happening once again within the volatility versus momentum profile. As you can see, we are again below the extreme percentiles right here, you guys. So we're again at fully contracted levels, and this stochastic momentum is suggesting a downside, which is in accordance of what we're talking about for coming back to test this channel right over here, and also testing back this this trend line right over here, you guys. So we're looking at a potential third iteration like this, and that usually that presents a lot of volatility coming up to either side. Now, in order for us to meet the criteria to move that, again, the 17.90% move to the upside, you guys, which is going to change just slightly because now we have another correct iteration based on what happened. So in order for us to meet the criteria to make that move to the upside, we need both the volatility component and the moving average of the BBWP both pivoted towards the upside and beyond past the 10 percentile critical low, all alongside the stochastic momentum pivoted towards the upside, you guys. When we do meet that criteria, we can actually apply this metric so we can test this area once more and potentially break out of it and use the 1.618 as a form of support before a continuation onto the upside. Let's move on to the RSI and take a look, you guys. Alongside the upside move of 17.90% that we did face and we did see, we saw multiple drives of bullish divergence in the 12-hour RSI period, you guys. So that actually very much helped us out. And this red line is a brand new line that I just drew. This is giving us a drive. This is a primary drive of bearish, hidden bearish divergence, you guys. So it could likely be already in play, which is also in accordance with what I'm talking about of testing these zones right down here and testing this trend line right down here, you guys. I definitely, based on raw price action, I can see CMRX facing a potential red day or sideways day tomorrow, or the combination of both, of course. So let's go ahead and open up a multi-pane right here so that we can be able to see a bias in direction in a few time frames, right, you guys? So let's go ahead and maximize these RSI time frames right over here. So we're going to start with the immediate short-term time frame. We're going to do a 30-minute and see what we have, you guys. So 30-minute is suggesting a continuation to the upside. It is now approaching the shallow areas of the bear weakness percentile. New listeners, this is the regular RSI setup. The bottom half is the bearish control zone. Upper half is the bullish control zone. The inner workings is the weakness percentile of either, and the outer workings of this of the RSI is the strength percentile of either the bulls and the bears. We are reaching the shallow areas of the bear weakness percentile, which is likely to have us gravitated into the bull weakness percentile. This is immediate short term, you guys. So 15-minute micro time frame is also suggesting a continuation to the upside, and it has since entered bull weakness percentile. Let's look at the bi-hourly and see what we have, you guys. So bi-hourly is also suggesting an upside, but we are getting a hint of the moving average pivoted towards the downside, you guys. This is likely for us to use as a form of I guess resistance, if you will, before a continuation on to the upside, you guys, to the downside. My apologies. So let's look at the 4-hour. It should be similar, but okay. So the 4-hour has no gauge in direction, you guys. This is a indecision, and it's likely based on what we're looking at for the economic data that's going to be released this week. 6-hour time frame. Let's look at that. 6-hour time frame is also, in a sense, in an indecision, and also right smack in the middle of the RSI, you guys. This is, again, actually, this is probably the 5th or 6th video now that I'm seeing this indecision, you guys, and almost every asset is facing this indecision. So now let's look at the 12-hour. We actually already did, and let's look at the daily. So the daily is also suggesting, sorry, you guys, the daily is also suggesting this sideways trading, you guys. This is all based on that economic data, you guys. This happens every single time the Fed has to talk, or CPI has to come out, or a jobs report has to come out. That this happens almost every time without a miss. So buy daily is suggesting a sideways trading, you guys. So please take in mind that I am not a financial advisor. I can't actually advise for you to sell or buy any asset. Please take whatever I do show and say within these videos as a form of entertainment, and please do your own DD and we'll be okay. All right, you guys. So in my experience, you guys, my mentor once told me, and I've said this in several videos now for this over this weekend, but my mentor once told me, if you can't see the edge based on your strategy, do not trade it. It's simple. Don't trade it. Everything right now is not giving us an edge on the direction, except for an immediate micro time frame upside, you guys. So the best way to make money sometimes is to keep the money, right, you guys? So I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter, on Discord. I'll leave the I'll leave the links in the description below for you to consider joining the ARCa trading community, you guys. But with that said, I wish you well. Have a good night, and I will catch you at the bell mañana. Adios.